If you bring this strategy to your accountant and they don't know what you're talking about, or they tell you no, they're telling you no because they don't actually know how to write this off for you, but they don't want to tell you that because they don't want to seem stupid in front of you. So they're just like, oh no, that person doesn't know what they're talking about. So
welcome to Life Changing Money, a podcast all about one of the most taboo topics in the world, money. I'm your host, Barbara Strehan, and we're going behind the scenes on business owners' journeys to money, success, and wealth. Let's get started.
Today, I'm going to explain a legal tax strategy most business owners have never heard of, and you're not using it. If you are using it, you're probably using it incorrectly, but it can completely change the way that you pay for health and wellness and your family's care for the rest of your life. Let's talk about medical expense reimbursement plans. So I was talking to a business owner who spent like $30,000 to $40,000 this year alone on talk therapy, physical therapy because they had a surgery, orthodontics because they had a few children, hormone supplements or hormone replacements and supplements. I'm sure we're all taking like magnesium and vitamin D and calcium and all of these things. And this particular business owner was paying taxes on all of that, meaning they were not using a medical expense reimbursement plan. And I want all of you to know listening that every single business owner out there could have a medical expense reimbursement plan and write off all health, wellness, gym memberships, supplements, but you have to have it set up correctly. And it's going to be set up differently for every type of business owner. So this episode is for you no matter what type of business owner you are. And it's hard, right? Like we all have medical expenses. We all work so hard for our money. And we have health insurance costs. We have costs associated with our children. Maybe it's braces, or maybe one of them, I was just working with my makeup artist this morning and her daughter fractured her foot on the playground. Like it just happens all the time. Maybe you're a burnt out business owner and so you're taking peptides and hormone therapy to try to just like feel good again. And I don't want you to be punished for doing the right things. I want you to be able to utilize this strategy, grow your businesses, and save money in tax. Health and wellness, statistics show, are the second biggest expense in most families' budgets behind taxes. So what if we could decrease the health costs by saving you money in taxes as well? So it's like a double whammy. So usually for most of you listening, you probably pay for medical expenses personally, which means you've made money in your business, you expense everything you can in your business, and you're left with the profits. Then you transfer those profits to your personal account, and then you're paying medical expenses from there. So you're already taxed on that money. And now the flow is going to stay the same and you still pay for the medical expenses personally, but your business is going to reimburse you for all of those costs, which creates a medical expense reimbursement on your business tax return. This is not about cheating the system. It's just changing the structure of how all of this is going to work for you and your family. The tax code allows certain medical expenses to be reimbursed tax-free when structured the right way. Now, I'm going to say the word MERP a lot for the rest of the podcast because it's a mouthful to say medical expense reimbursement plan. So we're going to talk about MERPs, which is the medical expense reimbursement plan. I'm going to say we're going to MERP it. That's the verb, which means we're going to write it off. Okay. So what these plans do is they allow you to expense these deductions and get reimbursed for them. And I'll give you so many examples. For most business owners out there, you're probably going to be an S corporation. So when you're the owner of the S-corp, the IRS does not allow you to have a MERP for yourself. But what you can do is hire a spouse, and then on that spouse's MERP plan, their spouse and kids are covered. i.e. you and your children, are covered by that MERP plan. If you have other employees in your S corporation, you are going to have to cover those employees as well because you can't discriminate against other employees. So if you do have other employees, you might want to do this in a separate business. But let's assume for most of you out there listening, you don't have other full-time employees, so you can implement this medical expense reimbursement plan. So what you're going to do most likely is hire a spouse, have the plan in place. Again, you need to have a tax strategist put these plans in place for you. This is something that we can do here at Your Tax Coach for you. We will create the plan. We'll give you the how to get reimbursed for them, what the rules are, the time frame for being reimbursed, the receipts that need to happen, and all of the templates that you need. So I gave the scenario, if you're an S-corp owner, no other employees, you're going to hire your spouse. If you're an S-corp owner and you have employees, you're likely going to create another entity and do it through that entity. Typically, that's through a family management company, a single member LLC, or for those of you that are not married, you can still have a medical expense reimbursement plan, but it's going to be through a C corporation because C corps have different rules for medical expense reimbursements. Some people will use like a third-party facilitator. You don't have to use those. You can have these plans in your business and not pay a third-party administrator for these plans. But let's talk a little bit about what could be reimbursed when you have this plan in place. So all of your health insurance can now be reimbursed. You can be reimbursed for copays, any fees related to doctor visits besides the copays that you are going to be reimbursed for already. This can be for all kinds of therapy. Maybe it's talk therapy, mental health, occupational therapy, physical therapy, any diagnostics, MRIs, any labs that you might need to take. And these could be for holistic doctors. These do not need to just be for your general practitioner. You could go to a naturopath doctor. This could be for a chiropractor. This could be for an acupuncturist, even medical massage therapists. So not just like your run-of-the-mill doctor. It can be covered for any recovery and treatment as well. So I mentioned physical therapy, but there's also pelvic floor therapy for all of you moms out there. For a lot of us, we need pelvic floor therapists, speech therapy for children, or if you have certain doctors for ADD, ADHD, autism, those would all be covered with your MERP plan. We have a client that has an autistic child and they have to pay for an aide in school, a full-time aide, which can be tens of thousands of dollars a year. And they've been paying that out of pocket. So the first thing we did was find a job that child could do and they could be paid tax-free through the business as long as, because they also get state assistance because of their child's disability, we had to make sure that it was still compliant with all of the disability coverage that they had in Social Security. And so you can create a certain type of trust for your child to where they're still protected and they still get all the coverage they need and they can be paid through your business. And not only were they paid tax-free through the business, but also the cost of this aid falls under a MERP plan, so they could directly get reimbursed for those expenses. So then the child now is getting paid and can use those funds for other things besides their aid and besides medical expenses, because we now know that that is being covered pre-tax. So now that child can invest that money. Well, the parents of the child can invest that money for them and just better ensure that they know once the parents pass away, their child is going to be adequately taken care of, because they will need aids their entire life and assisted living, most likely for their entire life. And so it's so important for families like this to really think about the long-term effects of your taxes, your finances, because every dollar you can save is like $100 for your kids later on because of compounding interest. I mentioned a little bit for mental health, but anything for mental health and neurodivergence, these plans can also cover. So ADHD treatment, anxiety and depression care. There's a lot of supplements out there now that say that they can help with ADD and ADHD, and they're not cheap. And so your supplements could now be covered for that. Maybe an executive function support coach or doctor, and even certain evaluations and testing. Now, if you know me, I'm Boujee Barb, and I love the Boujee health and wellness expenses. So as long as you have adequate letters from doctors, you can start writing off things like hormone testing, functional testing, hot tubs, saunas, cold plunges, red light therapy, vibration plates, walking treadmill desks, biochargers. We just bought a biocharger. It's so cool, and it's supposed to be so good for you, but they are not cheap. They're like anywhere from $15,000 to $20,000, but they are covered under a medical expense reimbursement plan. So I purchased the biocharger personally, and then I get reimbursed from the business for that. So essentially, I got to buy it at a huge discount. But same thing, we've purchased all of those things: a red light, sauna, cold plunge, hot tub, vibration plate, hydrogen, water. There's so many different things you could buy. IV therapy. So anytime I feel like I'm getting sick, I go get an IV, because like as a CEO of multiple companies, I do not have the time to be sick. I can't take the time off, nor do I want to be sick. So I go preemptively get IVs. I'm also super, super anemic always. So I have to go get iron therapy, and those are not cheap. It's like $400 something per IV. And I usually have to get like 5 of them at a time. So having those covered under a medical expense reimbursement plan is also really important. Medical grade skincare is also covered, and you can Google like medical grade skincare, so that way you can see all the various things that are covered. But I was like so surprised. Some of my favorite brands that I already use, I can now get reimbursed through my business for. It can also be used for any sunscreens, anything with salicylic acid or glycolic acid, like for acne. It can also be for acne patches, hand sanitizers, tampons, condoms, any like birth control, contraceptives. These plans can really cover so many different things. But most CPAs have never heard of these plans. I mean, I had never even heard of them until 10 years of doing taxes. And then I discovered them a few years ago, and the One Big Beautiful Tax Bill in July of 2025 actually made it so much better and so much easier as well. And now gym memberships can be covered through medical expense reimbursement plans. So again, for all of these things, including gym memberships, you're going to want to get letters of medical necessity. And you can get these from your doctors, chiropractors, naturopaths, holistic doctors, and they have to be for a medical reason and a medical purpose. So this could be like you need a gym membership to avoid obesity or to make sure you don't become pre-diabetic. So it can be preventative as well. But you can get a hot tub for low back pain, or a sauna. I was prescribed a sauna because I've had 2 melanoma surgeries, and the number one common thing with people with melanoma is they don't sweat enough. And so my doctor told me I need to sweat more, which is also why I do hot yoga. But also they said like get a sauna and be in that sauna multiple times a week. So there's a lot of things you can get for low back pain, for stress management, anxiety management. You just need to get a letter of medical necessity first. Again, if you bring this strategy to your accountant and they don't know what you're talking about, or they tell you no, they're telling you no because they don't actually know how to write this off for you, but they don't want to tell you that because they don't want to seem stupid in front of you. So they're just like, oh no, that person doesn't know what they're talking about. So do your own research. Like, don't just trust one person ever. Do your own research. But if your accountant is telling you no, we are like so happy to help you create these plans and structure it so that it makes sense for what type of entity you have, how much money you're making, do you have employees, what does your family structure look like, what are the goals of your family? Because it's not just about this year and today's taxes, it's also about what can we also strategy stack on there for your future. So do we want to add in an HSA? Do we want to add in an FSA? Do we need self-employed health insurance deduction? Do you need certain health credits as well? What does the health insurance plan look like for the rest of the employees? Are you legally required to have the health insurance? So there's so much that plays into these plans and these strategies, but don't let your accountant tell you no, because most of these like CPAs and accountants out there, they're not going to know the plan. There's also a lot of people, they hear this and then they're like, oh, what TPA, third-party administrator, do we have to use to implement these? And you don't have to use a third-party administrator. You can do these yourself and do the admin work yourself. There is setup that's required. It will take some time, but like, is an hour of your time worth writing off $40,000 of medical expenses? I think so, because you just spent an hour of your time to save 20 grand, and not just 20 grand this year, but 20 grand every year. And you need to preemptively have these plans in place in case you have a medical emergency happen in a future year. Because like, what if you got in a car accident and now you have $100,000 of out-of-pocket medical expenses? Well, if you had the plan in place before the car accident, you could get reimbursed for all of that through your business. Does it still suck to have to pay it? Yes, but at least now you saved like $40,000, $50,000 in tax on it. Whereas if you didn't have the plan in place, you'd still have to pay the 100 grand and you wouldn't get a deduction for it. And you don't want to take these medical expenses on your itemized deductions because they're just not worth as much. There's, first of all, a threshold you have to get over before you even get $1 of tax savings. And then you're also limited on top of that. And again, it's just a lot better and easier and worth more to have it be ran through your business. So you need to have the setup right. You need to have a tax strategist set this up correctly for you. There's going to be ongoing admin for it. So every single month, what I do for my MERP, every month, we tally up all the medical expenses that we can think of. We keep a spreadsheet every single month. And let's say all of our medical expenses for that month totaled $3,000. Well, remember, I paid for all of that personally, $3,000. So I'm going to send an invoice to my business showing the $3,000 worth of receipts. My business is going to direct deposit $3,000 into my account, tax-free. Remember, this is not taxed, so it's tax-free into my personal account so that I'm reimbursed for all of those medical expenses. And then on my business, my profit and loss is going to show a medical expense reimbursement of $3,000, which lowers my profit by $3,000, i.e. saving me a lot of money in taxes. And then you need to make sure these are reported correctly on your tax returns. So that is also very crucial in all of this. You can't just, willy-nilly a plan and throw it together and think you're documenting it correctly and then have it be effed up on your tax return. So you really need a professional to do these for you. And we are happy to do that for you at Your Tax Coach. Some common mistakes and misconceptions with a MERP is that just going out and buying the thing and having the receipt is enough, because you have to have the plan in place. You have to have the right accountable plan, the right medical expense reimbursement plan, the right reimbursement spreadsheet. Does it say how long you have until you can reimburse yourself? And you can't just go out and buy it and have the receipt and think it's covered if you don't have the letter of medical necessity, and you have to know which items need a letter of medical necessity versus the ones that don't. I think also assuming that gym memberships automatically qualify is a misconception. Like, you can't just hear this, go and do it and think that you're doing it right. Because a lot of you probably have heard me talking about MERPs on social media, and then you're like, oh, sweet, I can write off my gym membership. I'm just going to throw it on my business card. And it's like, no, you have to have the plan in place. It has to be paid personally. You have to have a letter of medical necessity first, and then it might be deductible. If you don't include your family properly either, then a lot of your expenses are going to be non-deductible, because if you haven't covered your spouse or you haven't covered your children yet, then that could really bite you in the butt later. And then you really don't want to mix business and personal. I say this every time I'm educating people and every time I have a masterclass, but you do not want to mix business and personal at all. So you need to know where to be paying these expenses, how to be reimbursing them. So just watch out, be careful. It is a really cool strategy. It can save you so much money. It allows you to buy some really, really cool things out there. And we have an amazing wellness guide. So you can go on our website and you can download our Write Off Your Wellness guide. It's so good. It's packed full of different strategies you can use, really cool expenses that now qualify. And again, you want to have this plan as a business owner to stack it on top of an HSA and an FSA, because my goal for you in a perfect world would be you use the Medical Expense Reimbursement Plan for anything throughout the year that you need to pay for, and that you fund your HSA and let it stay in there and grow and invest it, and it'll grow and grow and grow for you until you're at retirement age. And now you have another stream of retirement out there. So all of you business owners need to have a MERP in place to save you money this year. And ideally you have an HSA on top of it that you're maxing out. This year it's $85.50 that you max out, you make sure it's invested, it's making you money, it's growing for you tax-free. When you take it out later for medical expenses, it's tax-free. Or when you take it out in retirement, you're just going to be taxed on it like a traditional IRA, which is a great other stream of income for you later. This is like a serious wealth building strategy. You might hear this and think like, oh, I don't spend very much on health and wellness, but I guarantee you when you download the guide and you see everything that it covers, you'll be like, oh yeah, I do spend money on that. And oh yeah, we do, like this scenario does apply to us. So don't just like disqualify yourself. This is really important. Again, this is just for business owners. Only business owners can put these plans in place. So, and just another perk of owning a business. It's amazing for families already paying really high medical costs. It's amazing for families preemptively because we never know when someone's going to get hurt, when there's going to be an emergency medical situation. Don't forget to download our Write Off Your Wellness guide. It's a free guide. You'll learn how the MERPs work, how you qualify, what expenses qualify, how to know if it's right for you. So comment wellness anywhere on my social media and you'll be able to download this guide. Let me know what you think of it. It's so helpful. Taking care of your health should not mean overpaying in taxes.
Thank you for listening to this episode of Life Changing Money. Don't forget to subscribe, and I would love if you left a review and shared it with your friends. See you next time.